Yo, this is the execution data set. I'm going to show you how you can execute, why you need to be paying attention to the execution protocol I'm going to be giving you, and what execution actually is, right? So let's get into it. Let's start with what execution actually is. Let's just start with what execution actually is. So we know that the market cycle goes like this, right? Up, down, and up. This is the cycle. And if we want entries, it has to be in the cycle. And basically, these points here is where we're looking for our entries. This is what I call the sniper entries, hence why I'm called the sniper, because this is what my whole life I've been dedicating to learning to be able to do this shit, right? Sorry for my language, but yeah, this is what it is. So this is the cycle you're looking to trade. So now I'm going to give you different scenarios, and we're going to go on the actual charts and show you what they are. So what the execution basically is, you're getting in on the pivot point of the market and you're looking for price to go and do this, but you're not looking for the whole move, you're just looking for a bit of it. That makes sense. And here is the retracement. We can get in here to come all the way back down to mitigate. When we get here, because obviously market has shown us the move, retail players are getting in, so we can have a move to go up. Understand the cycle. If you understand this, your execution will be clear. So cool, we know that the market moves like this now. So now let me go on the actual charts and show you. This is what it will look like, right? So we're currently on a daily chart. So I'm going to go back. We're going to start with this one here, right? First, I'm going to go through a few things of why this had to happen, or why this happened, even had to happen, why this happened. Before we do that, let's go on the left and look at what happened. Look, we have this high. What broke it? It was this black candle here. That black candle has a wick, right? What did we do? We mitigated that wick, taking liquidity. So you see how the main push also has a narrative where we can get in. Hence what I'm saying, at these points you can always get in. This is where the market moves. It's pivot points where a new liquidity cycle could start. So now we've got this. Let's go on a lower time frame. I'm going to replay this and go all the way back to here, right? And let's see how we could have got in, because this is daily. Let's just do this point here, because this is where the mitigation happened. Let's do this portion here, and let's go on a hourly since we're on a daily. Cool. So now let's go and refine this thing on the left. This point here, we have to refine it. So now let's go and refine it. We know that price, this came, tapped this point here. You could say anything here is fine, as long as it took liquidity and then done this mad thing, which broke the structure that we're looking for. So cool, we can look at it like this. This is the last down candle. But remember, this is on an hourly. But on an hourly, we also know that, okay, cool, if this is the last down candle on an hourly, ideally, I would just do this if I don't want to go lower. Midpoint. So midpoint of this candle, we haven't hit that yet. So there's still a possibility we could come back down and hit that midpoint. That midpoint would be the discounted area. So let's see if we hit that. This is on an hourly I'm doing this on. You can, on a lower time frame, you can refine it all the way down to the minute. So now look, we haven't, this point came, it still hasn't hit the midpoint. The midpoint is this line here, this middle line that you see. Just make it black. See how this midpoint, we haven't hit it. We come and hit it here. Now you're asking me, what is the entry protocol? What do we come